Joining us now is Lance Wilkes, Senior Equity Analyst at Bernstein. I don't know how many languages you speak, but do you speak this language of what UnitedHealthcare said as far as the new outlook reflects heightened care activity indications within the Medicare Advantage business? More people, more utilization? Is it that simple?
Yeah, good morning. And I do speak insurance. I'm a 20-year industry guy. So unfortunately, I speak this. So I think what they're really talking about here is more utilization. They're seeing more activity in physician and outpatient sites like surgery centers and things like that. What's unusual about this is really the miss was pretty modest. Actually, they beat our estimates for the quarter, but they brought down guidance about 12%. So seemingly what they saw was a lot of activity that didn't flow through in results. That might mean that it was shielded by deductibles, beginning of the year type of things. But I think that's what they're talking about.
There are some other. What else? What happened at Optum? What else happened here? This is not normal to see.
No. This is very
20%,
very unusual. Yeah. So I think there are two big things here, and I think the first thing is the higher utilization is really surprising, coming off the high level of utilization or care activity that we've seen. What that would suggest to me is that probably United and maybe the industry pulling back on prior authorizations, on kind of the intensity of some of the activity they do to manage utilization, which obviously causes a bunch of consumer dissatisfaction. They're pulling back on that a little bit. I'd suspect that what they're seeing is, more utilization as a result, and a lot more than they were expecting. That's the first thing. The second thing is this seems to be very concentrated, or at least initially concentrated in the Medicare Advantage business. The couple of years of lower payments, the changes to the risk adjustment formulas, the changes to kind of the whole system over the last couple of years, which really took effect in 24 and 25, I think cumulatively are really impacting both their Medicare and their Optum Health businesses, because both of those really get paid a lot, or a lot of their revenues are focused on that Medicare Advantage program. And so I think it's a Medicare Advantage thing, and I think it's probably United pulling back because of the policy headwinds and the scrutiny on the company. That, parts of that are going to be an industry phenomenon, but that probably leads United to be kind of resetting a jump-off point for what their core earnings are going forward. That's why, pullback in the stock is reasonable, although I'd say that this level is probably excessive. Again, the guide was down about 12%.
So, Lance, can you actually connect the dots to some extent to the horrific situation that happened a couple of blocks from here, and it focused a lot of attention on UnitedHealthcare, and I don't know whether, is it just across the board for Advantage, anybody in that business, or just the industry in general?
I think there are two things there. I do think the horrible thing that happened to Brian Thompson and the company is a part of this, and I think it's reflective of also the Department of Justice scrutiny on United over the last couple of years. United being the biggest player, so they are the figurehead for managed care, and I think they are likely looking at what do they need to be doing from a policy standpoint to be a more acceptable player in the U.S. healthcare system. And we saw Cigna do this in a very modest way earlier in the year, where they reset expectations by like $150 million. But that's a much narrower business. For United, what they're probably doing is changing the way in which they interact with their consumers. And they're trying to slowly reset what that expectation is with a health insurer. And that is probably having a bigger impact than they had expected on levels of utilization here. So that's one thing. The other thing is, Medicare Advantage probably was over-earning, overcharging, upcoding for a period of time. And there was, under the Biden administration, a lot of pullback, a lot of levers pulled to try to reduce that overpayment. And we're probably at a point where the impacts of that in 24 were significant. In 25, though, there's still some lingering impacts of that. And We're probably still establishing what that base level of payment ought to be, what that base level of earnings. I wouldn't be surprised if United and probably other Medicare Advantage plans are going to be pulling back on what they're doing from a coding standpoint, from a risk adjustment standpoint. So both of these are kind of reactions to policy, but they're flowing through as far as their anticipated actual results. And this is that constant tug of war about affordability versus access that I think we're seeing here. And right now, I think access is winning, and that's what United is kind of conceding is, okay, we need to give more access.